Monday, October 27th. You're waking up to probably a gap up in the market. If you're waking up right now, I am. It's 8:52 as I record this. We're going to go over why Wall Street's flying. Crypto is going nuts. AI watch lists, which I kind of told you about, what I gave you, blah, blah, blah. Bull market signs. We're going to go over the economy. We're going to go over earnings. And we're going to go over the Fed. All of that happening this week. So we'll go over a lot, including a Mr. Beast bank. I'll kind of push that out there as well. But let's look at the cues first. Here's TrendSpider. This is my preferred charting program. And you can see on my screen, by the way, it's just Bollinger Bands, it's moving averages, it is RSI, it's MACD, it's all the indicators. These are things you should know. It's a sliding volume. I can take this particular volume slider right here and move it back and forth, so I can move it back here and these volumes change. So I like to look at this. I like to see, okay, where is QQQ? Are we within a volume section? Yes. People have been buying up here. That's what it tells me. It tells me that, hey, people are buying the dip. And as we've gone sideways since September 22nd, people have bought any dip down. So last week I posted Barron Trump's photo along with a crypto wallet that had a 100% win rate, a story. It was worth hundreds of millions of dollars. People think that it's Barron Trump's wallet. He maybe knew something was brewing. And I can tell you today, okay, my Webull account, which was lagging down at about $12,000, we're at $14,000. It's all ETHA, it's NVIDIA, it's IBIT, it's all the movers. I'm going to give you a mover later. But today, what I'm going to give you, on Friday, I went over how I used AI. And by the way, if you ever need the newsletter, it's right here. I used AI to build a watch list, why you shouldn't follow my trades, risk and strategy. Well, that AI watch list, I gave you links to them, okay? You can get a free 7-day trial of Seeking Alpha Premium. This is the watch list that I built. I went in and I asked Grok, hey, what are the trending stocks? Well, I gave you that list in TrendSpider. You can literally import it into your TrendSpider setup if you just click on this link right there. So again, a watch list is important for times like today. We're going to gap up. Do you want any of these? If we go over to Seeking Alpha and I look at this Grok Twitter profile and I look at stuff, we can see most of these were up on Friday. Netflix was down, Tesla was down, J&J was down. But there were some big movers like Coinbase that was up 9%, IBM that was up 7%, AMD was up 7%. Again, it's a way to take a look at a market and find stocks to trade. What I did was I included the quant formula. And what's 4.56? It's ETH. This is Grayscale Ethereum Mini Trust. Now, this was up 1.7, but today, if we go and look at this, in pre-market, it's up 5.47%. So again, if you had that watch list, maybe you looked at buying that. It's just me giving back, saying, hey, here's the stuff that I'm working on. And it's starting to feel like a bull market again. We're going to go over, okay, first thing is the economy. Trump announced and his administration announced that the China deal is likely and the TikTok sale is likely this week. We've been talking about this. China deal is big for this economy. It's going to push the market up. You're going to start seeing charts move up. Starting next week, you're going to start getting companies buying back their stock. You've seen this stock market as a buy the dip kind of market with a ton of money on the sidelines. We've gone through the seasonality. Okay, we talked about, let's just look at the seasonality of QQQ. We'll go back to 2000. We've talked about how August wasn't a great month, just average. We talked about how September was one of the worst months of the year with a mean change over the last 26 years of -2. Boy, Did we see a dip? No, we didn't. We talked about October being a positive month, but nothing great, but November being the best month. So we've seen volume picking up. We've seen a Fed rate cut this week and a China deal. And by the way, add to that, if for some reason the government starts open again, you're going to get a boom. And what do you have coming up in November? You have Black Friday and holiday season. So it's all brewing for a bull market. And I put this out on Friday. You've got mega cap earnings. Will they be good enough or better? That's what we're going to talk about. The Fed meeting coming up, you know they're going to cut. And also, you know Trump is going to put someone in the Fed chair that will get rates down to 2%. Don't fight the Fed. Go and Google it. Go and talk to AI about that saying. Then you've got China trade. You know it's going to be a victory announcement. You knew that when he's going over there to meet with Xi. He's not coming back and saying, yeah, they're not buying soybeans. He's coming back and pointing out winners because he doesn't want this to be a loser. Okay? Then you had QQQ. August was up 2% on the month. September up 7%. October so far is up 3%. If you just pull up this, again, this is why I want you to have charts, be able to pull up a monthly chart. We haven't had a down month since March. It's a bull market until it's not. And this week is going to be absolutely insane. Wednesday, you have the FOMC decision announced, and you have Jerome Powell's press, and you have Apple, Microsoft, Meta, Amazon, and Google. It's going to be insane. And I want to point out in the newsletter and on this podcast, okay, in the newsletter and on this podcast, I had said, hey, TQQQ, November is not a bad time. It's actually seasonally the second best month. We play this all the time in July. Why? Because the mean change over the last 16 years has been 12% in TQQ. So we buy it in June and then we sell it along somewhere in July for a gain. Well, I said in October, that might be a good strategy. And I pointed this out. So when did you buy it in October? Because we just had here September 4th, it was on this run. That's a nice 8% gain. And then in October, it took a little dip, okay, around 102, got you in at 108. By the way, today, it's at 114. So find an entry in this and play it for November. Again, seasonally, it's the second best month of the year. And how are you going to enter this? Well, I'd say you have a strategy. Find one. Use Sidekick, okay, in TrendSpider. If you don't have TrendSpider, go to Linktree, linktr.ee/daily stock pick. The URL is right on the screen, okay? And the top link leads you to TrendSpider, and they are having a phenomenal Halloween sale. Now, you can get premium for the price that you normally pay standard. It's about the same. You save up to 55%. I point people towards the advanced if it's within your budget. And the reason I point people towards the advanced is the bottom portion, okay? 52 trainings per year. You get a one-on-one Zoom session with a product expert once a week if you want. If you want to just take 52 days and do it every day, you can do 52 days of it. But that works out to an amazing price. Again, $96 a month. Divide that by 4 because you got on average 4 weeks in a month. And if you're going to do it, again, that's under $25 per training session. And you get TrendSpider for free. And FYI, they're throwing in Sidekick Basic. Everybody gets 25 messages a month. Okay? This is an additional $50 value that they're throwing on. It is on sale. Go and sign up for an annual plan and you'll get my 4-hour algorithm. I use the 4-hour algorithm exclusively for all of my stuff. In fact, I'll bring up on Friday, I got an alert for a stock I wanted to add to, and you can see it right here. And yes, I added to it, and it's up 3% in pre-market. It's Robinhood. Was it a great thing to buy on a Friday? Probably not, but I got the alert. And I love this 4-hour algorithm. It doesn't beat buy and hold on Robinhood, but I'm looking to build up a position in Robinhood. And when I look at the results down here on the bottom right, I see over 24 months, there are 20 positions. So it's not like you're trading every day. It just so happens there were 3 alerts, okay? But it wins out of the 20 times it takes a position. It wins 20 times. You have earnings coming up. If you don't think that there is some degenerate risking his entire IRA on the prediction markets, on the Jets winning yesterday against the Bengals, you're just not looking at the potential of this stuff. Because I think Robinhood is one of the best and most aggressive plays out there. Now, here's the thing. Seasonally, we can go back and look at this. Let's go back. The last 4 years, this is a horrible time to buy Robinhood. You can see May, but this is 4 years. So it's only 4 times. So I don't take the seasonality of Robinhood into effect there. I do think, by the way, small caps will get a run, and they're just getting started. The bull market in small caps appears to just be getting started. This is from TrendSpider, okay? This is the squeeze. It's this is a monthly chart, and it's saying, hey, the squeeze is starting to happen. So IWM, not bad. 4-hour algorithm makes you 50%. So if you're trading this one, why not make 50% instead of buying and holding over the last 2 years where you make 42%? It's not a bad one. We can see that trend line right there. We can see anchored at COVID where we're just starting to break that trend again and get out and break above this 244, which was a previous high and a resistance. Is this breaking out? Well, I've been saying my play on small caps, it's the Alpha Picks portfolio. I love this one. It has beaten SPY for the last 3 years. IWM has underperformed SPY for the last 3 years. Let's just go and look. We'll look at IWM. We'll go to the charting, and then we go over the 3 years. Look at that. IWM up 43%, but SPY is up 78%. And when you look at Alpha Picks performance, it's 251% up until October 16th. It's up even more. I've been in this for just over a year. I have been extremely happy. How do you get Alpha Picks? You go to Linktree. Okay, the second link is the bundle. This is the one I always suggest. You'll see me go over some stocks with the quant rating. That's Seeking Alpha Premium. The second portion of the bundle is Alpha Picks Portfolio. Go to Linktree, find the tool that you like. But again, maybe this is the time when small caps outperform. Typically when the Fed, go and ask an AI agent, go and ask Perplexity. When the Fed lowers rates, do small caps outperform? Just ask it. Have a conversation. And the rest of the year could be crazy. Okay? My prediction, something like last year, and I'm pretty good at predictions. If you go and look at the newsletter, you can actually look up my 2025 predictions. And I think I'm 100% right at this point. If not, like out of the 6 predictions, I think I got 5 right. There's a lot. But my prediction is something like last year. You're going to see people not selling into the fourth quarter because they want to pay capital gains in 2026. So if you're starting to see a buy the dip mentality, that means buyers are showing up, but sellers aren't there. And Goldman says short squeeze, calm macro, curb quality stocks rebound. Goldman Sachs sees limited term upside for high quality stocks. This is their thing. I don't know where it is. Oh, there it is at the end. Goldman sees limited near-term risk for high-quality stocks given stretched valuations, resilient short interest, and a macro backdrop that favors cyclicals over defensives. However, the strategist suggests that recent underperformance may have created opportunities to accumulate select quality compounders at more attractive price points. And I want to point something out to you that it was pointed out to me, and I thought this was amazing. Okay, let's bring up a company like Oklo. Okay, and we will look at Oklo, and we will look at their financials. They have absolutely no income. No income. It's all expenses. And I want to point out, their market cap is $20 billion. Okay? You are paying for the future. That makes sense. But go and ask AI what the market value of the Dallas Cowboys franchise, the most popular, the Yankees franchise. It's not $20 billion. I would much rather have a sports franchise and buy into something like that has continued revenues than Oklo and risk it. So that's what Goldman Sachs is saying. Hey, there might be some extension of these types of names that may go a little crazy, but you're going to have to deal with that volatility. But again, that's going to be where the tools come into play is, hey, let me find good stocks with good management, good profits, and good products. Okay? And here you go. One of the alpha picks, by the way, that I bring up is APP. And TrendSpider, again, using the tools that you have on the hunt for the next NVIDIA. TrendSpider went in there and said, hey, can you find me a stock that matches NVIDIA's 2021 profile? So let's just, if you didn't know, NVIDIA had one of the greatest runs from 2021. Okay? 2021, November, it was up here at $32. Now that may seem like, oh my God, that's so cheap. Well, by the time you got to 2022 in October, it was down to $11. That's more than a 50% retracement. That's a big retracement, 64%. Could you sit through that? Because now, not only did you have that 60%, that was an opportunity. This is a 428% gain. 428% gain over 3 years. Let's find a stock that fits that type of profile. APP got a perfect score. This is an alpha pick. Explosive growth, fat margins, and expanding profits. So maybe APP is fitting that one. AppLovin. We've talked about this one, how this one dipped down and it was a buying opportunity. And even here in February, where you had this dip and then it took off, and it's not at all-time highs. The all-time high is $745. It's trading at $620. If you go and look at the quant rating of this, it's a hold. Well, why is it a hold? The only difference is the revisions. And we've seen short interest come out, but when you go and look at this revenue down, revisions, blah, blah, blah. When do they have earnings coming out? It's coming out, let's see, November 3rd. So you got next week. I got interrupted several times, but it's edited. It's out of there. But AppLovin, there's another one. Sidekick flagged FTAI. What's FTAI? I have no freaking idea. But the chart looks good. Chart looks like a cup and handle. This is FTAI Aviation. Industrial, trading companies and distributors. What do? Let's go down and look at the description. Aviation acquires, sells aviation equipment for transportation of goods. Let's look at its market cap. Is it good? Well, it's an $18 billion market cap. Year to date, this is up 26%. Over the last month, it's only up 0.88%. Its Wall Street price target is $216. That's a 20% upside. Okay, you look at the valuation. It's stretched. The valuation is stretched. It doesn't have a PE. and its PEG ratio isn't there. Don't love it. But again, if you're trading that one, maybe it makes sense. The chart setup is good. Again, understand what you're getting yourself into. And what we have coming up, we have an amazing week of earnings. It's going to be a crazy week. Amazon, Google, Microsoft likely to benefit from stable, healthy cloud spending. They are pushing for a move higher. I have said this before. Amazon is the lagging Mag 7 stock. I like it getting back to that 242. Just understand, if you're going to buy it today, it's at 228. Your upside, until it breaks through 242, that is going to be resistance. We've seen it. It popped down from here back in February to April. It popped up here. We haven't seen it push above that. But if you look at Amazon on the quant rating, it's a hold. This was actually a strong buy up until just a few days ago. What's changed? Well, the valuation changed. It's a bit stretched, but you look at the revisions, everybody's bringing their revisions up. There's only one that's bringing it down. And when you look at this one's valuation, the valuation is the only one that's bad. The PEG ratio is under 2. That would fit Peter Lynch's style. So again, find the stocks that you like. That is a top 5 position for me. The top 5 are Amazon. Apple's by far my largest. Amazon, Microsoft, and Google. Those are 4 of the top 5 in my portfolio today. And it's clear, big tech earnings will steer the U.S. stocks through year end. What you hear in this particular earnings period is going to push the market for the rest of this year, because there's 3 things in the market. There's the economy, there's the Fed, and there's earnings. Pricing at these valuations, they will need to push higher and higher earnings or higher and higher growth. Meta, I have brought this up before. I think Amazon and Meta are the 2 best opportunities in this market of the Mag 7. So if you want earnings, again, this is a great look at earnings. It goes day by day and what to expect. And it gives you everything, like SoFi Technologies. We'll go over at the end of this podcast exactly what earnings I'm looking at, because I have a personalized earnings calendar here in Seeking Alpha. You can see right down here, earnings calculate. It's right there, the calendar. It does it for me perfectly. So I can say, oh, okay. Now we have the Fed, and the Fed's expected to cut rates this week. So I was watching a little video today or this weekend, and somebody said, I don't know who it was, but they said BLV. And this is a stock. This is Vanguard long-term bond, BLV. Let's look at it here. BLV. There it is, Vanguard long-term stock. So it's like an ETF. Let me see, BLV. Pull it up. There it is. It's got the quant says sell. Why? Because rates have been bad. And I saw this one when I was looking it up. So I went to Perplexity. I said, if interest rates go down, is BLV a good investment? It says yes. Bottom line, if the Federal Reserve begins cutting rates, especially from current high levels, BLV is likely to see both capital gains and steady income, making it a strong tactical or medium-term play for investors expecting a bond rally. However, it's best held as part of a diversified fixed income portfolio. So am I looking to trade this one? I don't know. I mean, it's yield 4.48. That's more than I'm getting in a high yield savings account. And if you look at year to date, it's up 5%. So not only are you getting that 4.48, but you're getting 5%. Why? Because it's a long-term bond strategy. So as rates come down, these guys hold the long term. So you're still getting that 4.48%. It's just a thought process. Just a thought process. But if you don't like bonds, which I typically don't like, hey, Steve is telling you, these are the ones that are powering the data center. And he gave you picks. It's Applied Digital. We can go look at Applied Digital. This one, year to date, up 337%. The next one in that article is PSTG, Pure Storage, which I brought up. I brought up before. This one, up year to date, it's 52%. One that I haven't brought up that Steve does a great job of analyzing in that article is Johnson Controls. This one might be the best opportunity. It's 43% year to date up, but the quant rates this one as a strong buy. Maybe it's good. Sorry, the dogs are in a panic. It's thundering outside. So JCI, Johnson Controls. Let's take a look at maybe the 4-hour algorithm. JCI. Let's look at this one. Does the 4-hour algorithm work? Not great. Wins 40% of the time. But maybe that leveling off as they report earnings on November 4th, maybe that's a good opportunity. Now, I want to warn people about holding any kind of financial stuff because it's been reported that Mr. Beast is actually filing for an online banking and cryptocurrency venture. If you know anything about Mr. Beast, he's a great businessman. I actually like him. I think it's going to affect Robinhood and SoFi because that's his audience. But he's going to get people on that platform. Here's the other thing. It's also going to push crypto. And in my mind, I think that's the biggest thing of this. I'm not scared about Hood. I'm not scared about SoFi. I think he's bringing more people to crypto. So I'll leave it at that. I don't exactly know what you want to buy. Go and have a discussion with AI about it. But for me, it's a big one. Now, this particular video was great. This guy did a look at Schwab, Fidelity, and Vanguard. Spoiler, Fidelity is the clear winner. One of the main things for me with Fidelity is that I can buy fractional shares. So with Alpha Picks, I usually need to buy fractional shares. If a stock is trading at $100, but I want like $900, I want to be able to buy fractional shares. Schwab, for some reason, still limits fractional shares. I have no idea why. They limit. And I stopped using Thinkorswim. They have a great platform with charting called Thinkorswim. For me, it was bloated. It didn't work. I love having TrendSpider. Even Fidelity has Active Trader Pro, which I used for quite a while. But it's just bloatware on the computer. I didn't like it. It lagged. The browser-based charts for me work the best. But between these three brokers, they're serving 99% of everybody that needs something. Now, I will tell you, I have Webull. I have Robinhood. I needed something. My friend needed something from Fidelity. She was able to call up, get a clear answer. And that's where Fidelity really beats the others. It's customer service. And he goes over all of this. So if you're interested in a broker, I'm not selling any brokerage service, but I wanted people to know there are three main brokers and what their pluses and minuses are. And this just does it really, really well. So this video will be in the newsletter today. And I thought this was great. If you've got Seeking Alpha and you've got your own personal earnings calendar, I like it. But here's a great earnings thing. This is great. I mean, this just puts it right in front of you for it. I like this. We've got Wednesdays, Thursdays, and Fridays. It's an earnings calendar, and you can see everything. Wednesdays is the big one, by the way, with Microsoft, Google, Meta, Cap, Now, ServiceNow, Boeing, Verizon. And then Thursday, you have Apple and Amazon. Wednesday and Thursday are going to be huge for me. And I do like, if I go, I pull up here. I pull up Seeking Alpha and I go down here. I can see which stocks I actually have in my portfolios and which ones show up. So I like these. Let's talk about some of the stocks because I also like Earnings Hub. And you can see Earnings Hub with all of this. I was using Perplexity, by the way, to ask about Earnings Hub, to ask about earnings opportunities. Again, using the tools that I have. But here's the personal list. Monday, today, we have Celestica, everyone's favorite alpha pick, top 2025 stock. This is a stock. If you had Seeking Alpha and you were here in January and you had this, they picked it as a top stock on January 15th. Now, you may have bought here January 15th at 127 and endured that 77% downturn, but you've enjoyed this 272% boom. Yes, I bought at 77, but they report today after the bell. Tomorrow, what reports tomorrow? Bloom Energy, which I thought was interesting. Bloom Energy, they are expected earnings per share 5 cents. Last time they reported 10 cents. Now, I will tell you, Bloom Energy has a huge short interest. 16% short interest. Year to date, this is up 396%. Over 1 year, it's up 1,100%. Bloom Energy is just a monster. If they report good earnings, expect a short squeeze to happen. The 4-hour algorithm had you in at $20. If you bought Bloom Energy on the 4-hour algorithm, you're up 482%. Boy, these prices don't look that expensive for a strategy that just made you 482%. It's a good one. Another one that reports, let's see, they report on Tuesday, is STX. STX on Tuesday reports, I alerted paid subscribers to buy here on the 4-hour algorithm at 155. This one has run up. STX, I think it's still a hold. No, it's a strong buy in the quant. It's still a strong buy in the quant. It's one of the top ones. I brought up some, Pure Storage. That was when Pure Storage was out. I said, hey, one of the best storage companies, there's two. There's Western Digital and there's STX. And then SanDisk is another one. So this one, I published this one in August. SoFi is announcing earnings, okay? SoFi is a hold in the quant. Why? It's expensive. It's expensive at 90 times forward earnings, even with the growth. But this one could pop. Again, 52-week range, you're up at $30. Do I expect it to break that? I don't. But you can always trade this one. And let's see, SoFi, let's see how those that long-term holders know. I like this one on a weekly basis because I liked this. And then it just broke out. And you can see on a weekly basis, we've got a MACD cross down. We've got the RSI down at 71, but you've got increasing volume. Now, from a 4-hour algorithm standpoint, it trades almost. You make 196%. That's pretty good. Got you into 28. Would I be buying at 28? No. One that I like that's reporting on Tuesday is UNH. Understand, this is still a beaten down stock, but it could get hurt with any warning. Why? Because last earnings period, they announced at $279. It dipped down to $246. I think I bought it $280 something when Buffett bought it. So I'm still in the money on this one at $363. I expect it to get back to $450. It's a long-term play. Again, thesis is out there. Then Wednesday, you have Microsoft, Meta, Google, even Melly, which way back when, I think it was a few months ago, I asked Perplexity, hey, Amazon and all of these Mag 7s are ones that really, traded higher. What's a couple of stocks that fit that profile, like a Sidekick just did for NVIDIA and came up with AAPL? Melly is one that could make $5,000 into $1 million is what it said, because it's got that type of profile. And we've seen it trade under this range. Is it an opportunity to buy around that 2020? Is that providing enough support? If that gives up on support, my assumption is you're getting down between $1,500 and $1,700. So risk reward, just understand, these are just guesses. These are supported by some volume sliders. If we just move this back to when it hit all that all-time high, you'll see these volume sliders. Again, where's the next volume? Big volume down, $1,600. So it's a risk. And Thursday's my Super Bowl. Why? Apple. 50% of my portfolio comes up. They're doing well. They have pumped. That $260, it is a resistance. This was December of last year where nobody was selling, and then it tanked, and we've run back up to that. Is it expensive? Hell yeah, it's expensive. For the amount of growth that they have, this is an expensive stock. The growth is a D. Why? It's 5%. The valuation's an F. Why? You're trading 35 times forward earnings for 5% growth. But they put off billions of dollars in actual gains. So it's one that I'm willing to hold on to. Risk reward, I'd rather have this than a savings account. That's just the thought of it. Then you've got Amazon, you've got Coinbase, you've got MicroStrategy, you've got Reddit, you've got Cloudflare. Friday is oil's big day. We're seeing oil getting taken down, but is it going to come back? And those guys, Exxon and Chevron, they're only going to make money when oil is big. And then next week, you have huge earnings. You have Palantir. You have HIMS on Monday. You have Novartis. That's all Monday. Then you've got Hut and you've got a bunch of others, Shopify, Uber, Spotify. You've got Hood, Qualcomm, IONQ. You've got SoundHound. You've got Airbnb. You have EOSE, which is a big shy play. You've got a bunch of earnings. This is the Super Bowl of earnings. So understand exactly what you're holding. Understand and get the tools that you need. Again, if you want my tools, the bundle that I suggest is TrendSpider. Get it on sale now. This is as good as Black Friday pricing. That is the deal. You've got 4 days to do this, and they're giving you Sidekick Basic, which is 100% messages, free for a month. Sidekick is the AI platform. And then once you get TrendSpider, go back over here and investigate. Do you want premium and Alpha Picks? Alpha Picks is just a great portfolio. And if you just want premium, you can get a free 7-day trial on that one. But I suggest you get the bundle. Why? Because you save over $150. Now, if you have any questions, hit me up. Linktree is where it's at. linktr.ee/dailystockpick, or just sign up for the newsletter and you can reply to the email if you want. But if you have any questions, reach out. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.